Take a look at this stock board. If you listen to television economists, they'll point to those green numbers, steady GDP growth, and low unemployment as proof that the economy is healthy. But when you walk into a grocery store and pay $80 for a few basic items, those macroeconomic claims feel entirely disconnected. We are living through a vibe recession, where rent has decoupled from the local median wage. The residential market has become a space that everyday workers can no longer afford to inhabit, regardless of what the official growth percentages say. Your household budget is under pressure from three distinct directions. First, global energy prices drive up the cost of food transport. Second, extreme weather reduces crop yields. Finally, corporate conglomerates expand their profit margins, knowing food is a non-negotiable expense. These combined pressures create a scenario where full-time employment no longer guarantees housing. In several major cities, 30 to 40% of unhoused adults are working 40 hours a week. At this level of fragility, a single missed shift or a surprise medical bill leads directly to an eviction notice. This fragile household economy is anchored to a financial system driven by human irrationality. When markets are high, participants often ignore systemic risks in favor of immediate excitement. In 1929, that excitement led everyday people to borrow money they didn't have just to buy stocks that were already overvalued. When investors finally realized those assets were overvalued, the resulting sell-off triggered a wave of defaults. Banks that had recklessly lent out depositors' cash collapsed, leaving institutional ruin in their wake. Because you cannot predict if the next crisis will be a temporary squeeze or a decade-long depression, you need a defense plan for every stage of a downturn. In a standard market correction or a bear market, stock portfolios drop 20%. This triggers a cycle of media panic and widespread fear. Historically, these drops occur roughly every 5 years. They act like winter in the economic cycle, clearing out overvalued assets and preparing the soil for future growth. Your primary defense is a cash reserve of 3 to 6 months of essential living expenses. Parking this in a high-yield savings account provides a layer of financial armor that doesn't depend on market performance. This buffer ensures that if you lose your job or face an emergency, you aren't forced to sell your long-term investments at a loss just to cover your bills. When a correction deepens and despair peaks, amateur investors often run for the exits. This is where the market hits its local bottom. This period of uncertainty is a systemic sale. High-quality stocks, real estate, and businesses are suddenly available at a significant discount for those with the liquidity to buy them. This chart shows the mechanics of dollar-cost averaging. By investing a fixed amount of money at regular intervals, you automatically buy more shares when prices are low and fewer when they are high. This removes emotion from the process and ensures you are buying throughout the dip. A defensive portfolio structure starts with 60% in broad index funds like the S&P 500 for low-risk market exposure. Another 20% goes into dividend-paying stocks, which provide cash flow even when the market is flat. You then allocate 10% to recession-proof sector ETFs, such as healthcare or consumer staples. The final 10% remains in cash, serving as dry powder to buy into the deepest parts of the downturn. By automating these buys, you stop trying to predict the bottom. You accumulate discounted assets and capture the wealth generated when the economy eventually recovers. If the government's ability to support the economy fails and fiat currency loses its utility, the strategy must pivot from finance to physical survival. When supply chains break, physical storage becomes your most valuable asset. Start with a 72-hour disaster kit, building toward a 1-year supply of food. Standard canned goods are heavy and have a limited shelf life. A prolonged crisis requires freeze-dried foods that are lightweight, nutrient-dense, and stable for decades. In an economy without functional currency, you revert to bartering. Tradable commodities like salt, instant coffee, alcohol, and germinating seeds become the new recognized standard of value. In this scenario, paper cash loses its meaning. Physical commodities are the only currency that will ensure you can trade for the things you need to survive. Consider the single asset that remains valuable regardless of inflation, a market crash, or the collapse of the banking system. That asset is your own earning power and physical capability. Investing in your education and your ability to solve problems yields a return that cannot be confiscated by a failing system. If modern infrastructure disappears, the ability to purify water, preserve food, or start a fire becomes more valuable than any professional certification. Resilience in a crisis depends on your ability to band together with a mutual assistance group. By becoming incredibly useful to a community, you ensure your own survival through collective effort. Whether managing expensive groceries or preparing for a larger crisis, the path is the same. Stop relying on the system to provide for you. Build your cash reserve, automate your investments, stockpile your essentials, and master a physical skill today. Be ready for the day the system stops doing it for you.